with analysis predicting a compound annual growth rate of up to 20% through to 2030. The electric vehicle (EV) market is looking more and more promising. Other top automakers are vying with Tesla for market share. And while the current challenging environment may slow down development towards EVs, there will probably be more demand for these cars. Tesla currently holds about 70% of the market for electric cars. Hey guys, welcome back to Everything. Tesla shares. The automaker recently released its quarterly delivery report for the third quarter of the year. It stated that it delivered 343,830 vehicles, setting a new record. This is a turnaround from earlier in the year, when a factory shutdown in China and difficulties opening factories in Berlin and Austin affected the number of vehicles the company was able to get into customers' driveways. Despite this, the manufacturer delivered more cars than the previous quarter, and the third quarter delivery figure still fell short of Wall Street estimates, which ranged from 358,000 to 371,000 vehicles. Additionally, there was a wider than typical discrepancy between Tesla's delivery figures and production, leading some investors to speculate that Tesla may be experiencing similar problems with demand. Tesla did not meet Wall Street earnings prediction for that same quarter. The Wall Street consensus for the third quarter was $22 billion in revenue and earnings of $1 per share, but Tesla reported revenues of $21.5 billion, which came out to about $500 million less than what Wall Street had expected, and earnings per share were at 1.5 cents. Although following the drop in deliveries, Tesla CFO Zachary Kirkland said that Tesla expects to be just below 50 growth rate in delivery, and this is due to the increase in the cars in transit at the end of the year. He added that investors should expect a gap between production and deliveries in Q4, and that cars in transit will be delivered to customers upon arrival at their destination in Q1. However, despite this disclosure by Tesla CFO, Wall Street still keeps his delivery estimates for Tesla's Q4 at 429,000 vehicles, which implies a 43 year-over-year growth. Is Tesla likely to perform better than this? And will high deliveries increase Tesla's stock price? In addition to a number of other factors, these lower earnings and delivery figures had caused Tesla's stock price to drop, as many investors feared a market crash. However, before we really dive into this video, don't forget to like, subscribe, and turn on notifications to stay up to date on everything going on with Tesla. If Tesla meets Wall Street's expectations by roughly 40,000 deliveries, it could rise by 10% in a single day. While some see early warning signs of caution for the automaker, such as its increasingly premium pricing at a time when the global economy is slowing down and expectations for global auto sales are being dialed back, others see Tesla's growth story returning and the demand issue gradually fading. Tesla's production and delivery seem to be proceeding as planned. The automaker has handled supply chain difficulties more skillfully than many of its competitors. A study that is still anticipated to show significant growth all year long as it increases output. Per the Morgan Stanley analysis, Adam Hughes, although there is a need for caution when it comes to pricing and Tesla's ability to book the economic cycle, he stated that it would be unreasonable to assume that there is a limit to how much the automaker can raise prices without causing suffering to people, and that the company was not exposed to slowing macroeconomic growth. Yes, there have been a few market hiccups that have sent Tesla's stock price plummeting, but the automaker has actually shown signs of improving delivery figures in the future, and if these figures continue to rise, Tesla's stock price could rise significantly in a short amount of time. The car company posted total revenue of $11.958 billion in the second quarter of the year, 98% increase year over year, beating an expected $11.36 billion in revenue. The company's gross profit also increased by 128 to $2.884 billion, and its operating income improved to $1.3 billion with an 11% operating margin. However, according to Tesla, this increase in revenues was due to a substantial growth in vehicle deliveries as automotive revenues rose by 97 to $10.206 billion also in 2020. Tesla beat Wall Street expectations by a wide margin in 2021. As a percentage of the total mix, Chinese production helped Tesla outperform second quarter profits projections and turn a quarterly profit increasing profit margins. In response, Adam Jonas highlighted first quarter profit margins, which he said were exceptionally challenging for the industry as a whole. Over the years, Tesla has demonstrated that it remains committed to the production and delivery of cars. Although current delivery data appear to fall short of forecasts, the manufacturer attributes these to uncontrollable circumstances. The automaker further stated that it had started transitioning to an even more regional mix of vehicle builds each week, which led to an increase in cars in transit at the end of the quarter. These issues are believed to be minor setbacks for the car company, which it is expected to have come in no time. It is also expected that Tesla's EV demand continues to grow, especially as the EV industry is starting to expand. Tesla stated that its production volumes continue to grow. It is becoming more and more difficult, though, to secure vehicle transportation capacity at a reasonable cost during peak logistics weeks. The average price of an electric car in the U.S. is currently about $67,000, which is roughly $20,000 less than the average price of an ICE model, which is at an all-time high. However, this is expected to change as more affordable electric vehicle manufacturers come up with new models. In its Q2 earnings call this year, Hertz revealed some findings regarding EVs erosion and ICE residual values in the future. The car rental company also confirmed that its EV fleet, which consists primarily of Model 3s, continues to perform better than expected from a cost depreciation maintenance and a customer satisfaction perspective by comparing both EVs and ICE vehicles. These findings could make Hertz an important case study in the transition to EVs in the future. Although electric vehicles still make up a relatively small portion of the auto industry market, Hertz claimed that EVs only require about 50 to 60% of the maintenance costs that ICE vehicles require, meaning that EV depreciation is significantly lower. Additionally, Hertz added that electric vehicles have higher customer satisfaction than ICE vehicles. The company's shares could be a wise investment to purchase and hold. Tesla's vehicles are the best and will stay that way even though there might be bigger sales chances down the road. Compared to the previous year, Tesla's valuation is still higher. This year, the automaker expects its earnings to increase by 79 to 4.05 cents. Additionally, a further 30% increase in earnings, or $5.29 per share, is anticipated for the fiscal year 2023. Top-line growth is also anticipated, with sales predicted to increase by 54 this year and an additional 39 the following year to reach $115.38 billion, which is triple the pre-pandemic sales of $24.57 billion in 2019. It's undeniable that Tesla's success is largely due to the profitability of each of its cars, as the EV maker enjoys several market advantages over other electric car companies. Although Tesla's net profit fell short of Mercedes-Benz from July to September, it did outperform both BMW and Volkswagen, with its net profit margin coming to 15% for the quarter. Tesla has become one of the most profitable automakers in the world. Tesla still appears poised for growth, especially because of its EVs. The automaker is planning to make these cars more affordable for EV fans globally, and that could be possibly done by cutting down on production costs, a move that Tesla has already begun. Tesla has almost zero debt and could survive the worst recession. The car company can withstand the shock of a downtrending economy. This is not the first time that Tesla's had to do this, and so the automaker can potentially scale through even the worst recessions in the future. Analysis believes that Tesla's still got more demand than it can supply. This is the bedrock assumption behind its aggressive expansion plan over the next year, as it ramps up production at factories in Shanghai, Berlin, Austin, and Texas. Do you think Tesla stock can rise up to 10 a day in the future? Let us know down below, and don't forget to tell us what your valuation of Tesla is. If you want to know more about what Tesla's been up to in the last few days, go ahead and click on this next video on your screen. See you there. Music.